Thanks for staying with us here on Finweek Money Matters. Well, research has shown that interventions to improve financial literacy have a mere 0.1% impact on changing financial behavior and consequently a negligible effect on achieving better financial outcomes. Interestingly, research shows it is counterproductive to try and scare people into behaving well financially. Well, joining us in studio to discuss some solutions to improving financial education and behavior is Anne Cabot-Alletzhauser, head of Alexander Forbes Research Institute, and Lerato Mahlangu, president of Powermani. Ladies, good to have you here today. Firstly, I must say I'm glad that it's an all-female panel, which shows that maybe we are the ones that need to be holding the purse strings a lot more. But on that note, though, how does one know when you are financially literate or financially capable? And let's start off with you.
Well, actually, that's a really good question, because I don't think the issue is around financial literacy. The right question is, are you actually able to take those financial insights, that financial knowledge, and translate that into proper financial decision-making? So the term that the FSB likes to use, and it's a term that's being used internationally by the OECD, is financial capability. And financial capability says that there are 4 different things that an individual needs to get right. The knowledge is one thing, but much more important is also the ability to do financial planning. It's also the ability to understand that there's a present and a future and a, and a beyond that needs to be accommodated. It's the ability to also look at products and make differentiations as to which are appropriate to you. That trade-off decision is hugely important. So there are these 4 different dimensions of which literacy is just a tiny part. So if we only measure literacy, we're going to be limited in terms of what the outcomes can be. But if we start looking at a bigger picture and understand that it's about financial decision-making, we can then start having a real conversation about improving outcomes for South Africans.
Having said that, we know that the savings rate in South Africa is significantly low, Lerato, but from a capability point of view, how do we fare with our international counterparts?
Okay, so what's been done is the OECD, they've done a study. So what the study measures is they don't just look at the financial literacy aspect parts of things, but they actually focus on the developed markets. So we actually not comparing like for like. In South Africa, the FSB is more concerned about whether are we saving enough in both the formal and the informal, whereas the OECD study is just focusing on the developed markets. So in that case, it's difficult to make an analysis of how we fare against the international markets.
Well, we know that the financial products are there, though, because we've got a huge array of financial services companies in South Africa. But how do we improve this level of financial capability that you both allude to?
But I think Lerato's made a really important point, because all of our research keeps going into how we're using the formal sector. But what she's basically highlighting is the fact that probably 50% of the activity in both savings, borrowing, insurance
is informal.
And that's what the OECD is missing. So it's very hard to take what we're doing and compare it to what the decision making is globally, because they're not looking at those parameters in the developed markets.
Is there an opportunity then to bridge the gap?
I think that's what they're trying to do. That's what the FSB is trying to do, right?
Yes.
Go ahead and tell us more, because I understand you also work with the youth in trying to change their mindset with regard to capability, many of whom probably come from an environment where informal savings is the culture of the game. But are they open to adapting to the more formal trends that we see in the market?
So what we're seeing is that, so what Powermani does, it's more of an educational platform to educate the youth. So we're also seeing a different opinions from people, like whereas the professionals are more open to the sophisticated products, whereas the other guys who don't have a formal education are comfortable with stokvels and all the stuff that's known by almost anyone. So it's more of you need to understand the client and cater to their needs. That's what you would try to.
Does it go back to advice, though? So often we hear about financial advisors, and yes, they also have their own regulatory challenges at the moment which are taking place. But does it go back to getting financial advice? And if so, how do we relate to the cost of the benefits of informal, formal financial advice, and more importantly, how we help teach each other good financial habits?
Well, in a sense, if you simply move right into the financial advice space, then we get into a problematic discussion. I think we need a completely new model for thinking about what financial coaching and mentoring and helping people out is, and redefine that space. Because right now, if you look at what is financial advice, that's typically all about people getting investment products or life products or whatever based on people who happen to have surplus capital to spare. That's where our advisory market is. But there's a whole new market that needs to emerge. And that's a market that integrates your informal and your formal. It looks at the family as a whole, because you have massive intergenerational problems, don't you? That it's not just you as an individual surviving, it's what your obligations are up and below you. And that's a completely new kind of planning problem that I don't think our advisory industry has even begun to grapple with. So I'm tremendously excited that there's a great future ahead for a completely new concept in this space.
So let's try to analyze those solutions. How do we change that? Bridging the formal with the informal, and more importantly, like you say, really getting to analyze and understand the culture around money in South Africa. Anne?
Okay, well, your starting point is how do you pay for it, okay? Because you're looking at an old model in which people get paid for by selling you something, but maybe the best advice to you is not to buy anything. You know?
That's why we have the RDRs, right?
So you're moving into a world in which what we need to do is to pay for that ability for somebody to become financially capable. And who is going to pay for that? And there are various different ideas that are out there that we could play with. One is that the workplace solutions is one place to play. So right now you have employers who are very concerned about their physical health of their employees. But if they were equally aware of how much destruction takes place from the financial distress of their employees, they would see that that was also important to pay for. And I can't believe that. The other thing that you really want to try to tackle then is, can the employer step up to the plate and help fund that sort of a problem?
Exactly.
You know? So that's one way to do it.
Multi-pronged approach.
The other way to do it is, just as an individual currently now pays for medical aid, could they not also pay for ability to be protected in the financial space?
Exactly. And unfortunately, we do have to leave it there, but this is a conversation that can definitely carry on, and hopefully we will find those solutions to changing the perceptions regarding savings and financial wellness in South Africa. A big thank you to both my guests, Anne Cabot-Alletzhauser, who's the head of Alexander Forbes Research Institute, and Lerato Mahlangu, president of Powermani. And that's all for this week's edition of Finweek Money Matters. Time certainly does fly when you're having fun, but be sure to get the magazine. It is out on stands, available for this week, and you can catch up on some of the topics we've covered on the show today. That's where we leave it. See you same time again next week.